Wynn Resorts. Went ahead and bought some more shares of Wynn. Now, Wynn's already a position in the dividend portfolio, probably the third or fourth biggest position, something like that. And I bought another 33 shares here today, paid about $104 in regards to Wynn. Now, do keep in mind when times are really, really good for Wynn, you can see their stock price go above 200, right? In terms of Wynn, their business is exploding in a great way right now. Okay, one of the hottest businesses in the world right now, literally. Operating revenues were $1.6 billion for the second quarter of 2023. That's an increase of almost $700 million from $908 million for the second quarter of 2022. Net income attributable to Wynn shareholders was $105 million in the second quarter of 2023 compared to a net loss of $130 million in the same quarter last year. Diluted net income came in at 84 cents a share in the second quarter compared to a diluted net loss of $1.14. I mean, these numbers are extraordinary. Our second quarter results reflect continued strength in North America and Macau, says Craig Billings, CEO of Wynn. In the U.S., Wynn Las Vegas and Encore Boston Harbor continue to perform well, generating a second quarter record adjusted property EBITDA at our combined North American properties. In Macau, basically Macau's coming back strong, and then they got a insane property they're building in the UAE right now, which is going to be a very exciting opportunity here over the long term. As far as our balance sheet goes, they got about $3.65 billion of cash on this balance sheet, compared to about $12 billion of long-term debt, right? And obviously they're in a position that if they want to continue to build up this cash balance to $4 billion plus over this next year, they could easily do that. With the money this business is going to throw off over the next several quarters, that's cake. But a lot of it's going to depend on how much do they want to pay in dividends, how much do they want to do for share buybacks and things like that. Not just that. GGR Asia, I've been using this website as a resource for years because if you don't know, I've been an on and off shareholder of Wynn Resorts for like a million years now at this point in time, right? And look at this. July Macau daily mass drop beat second quarter daily rate, says the Wynn CEO. Market-wide GGR, gross gaming revenue momentum in Macau, has been impressive, building through the second quarter, stated Mr. Billings. The strength has continued into the third quarter with mass drop per day in July exceeding what we experienced in each month in the second quarter and reaching 120% of daily mass drop in versus kind of 2019. So basically the Macau business is either at a place that it was prior to Rona, if not in some ways better than it was prior to Rona. That is huge, okay? Macau is officially back, baby. Macau is back, and that couldn't be better news for Wynn Resorts. Like, that's as good as it gets when Macau is back rolling again, because Macau is basically like shut down for like 3 years. It was ridiculous, okay? And the fact that Macau is now rolling again, and keep in mind the Chinese economy is actually not even in a great place right now. It's not like the Chinese economy is booming. If you look at some of the unemployment rates coming out from especially a lot of the youth and whatnot, they're not in a good place. So Macau putting up these sorts of numbers, imagine when China's economy does kind of get back on the right footing again and what those Macau numbers can be. Now, not only that, but we got to talk about what's going on in North America and what's going on in Vegas, because there's some big stuff going on in Vegas, okay? The F1 race is going to be in Vegas in the next few months. That's in November, right? And now this F1 race, I believe, is going to go on, as long as this one goes decent. It should go on every single year in Vegas, kind of moving forward now at this point in time, right? And this is absolutely massive. The publicity, obviously, this gets Vegas. The room rates are going to be some of the highest room rates you've probably ever seen in the history of the Wynn Las Vegas, which the Wynn Las Vegas was built in 2008. Encore was opened in 2009, right? And I don't think you're going to ever have seen room rates higher. You can't even, I bet you, if you try to look up and see if you can get a room at the Wynn or Encore for F1 race, I bet you any money it's already probably booked out. You probably can't even get a room there. And the rates they probably are getting for that is going to be ridiculous. The casino drop is going to be disgusting for F1 weekend. You have like the amount of money that follows F1. This is like the ultimate sport for a company like Wynn Resorts, because a lot of their clientele and customer base loves F1, okay? A lot of money there. So that's phenomenal news. Also in Vegas, in a few months, is the Super Bowl. February 2024, we got the Super Bowl here, which is, the granddaddy of them all. So we're talking about the Vegas numbers over the next several quarters are going to be phenomenal, okay? So you got Macau rolling again. You got Vegas that's going to be putting up the best numbers we've ever seen in history over the next several quarters. And that makes for a very, very exciting time here for quite a while, right? Now, in regards to Wynn, they obviously just started paying dividends again very recently, now that they got their business on the right footing again. But keep in mind, these dividends I'm getting today are very small numbers compared to what these dividends should be in future years, okay? This used to be a company back in the day that would pay 75 cents per share you owned, sometimes $1 plus per share you owned of Wynn Resorts. So when I look at a stock like Wynn, I'm like, they're going back here over time. There will be a day again when they're paying out 75 cents a share, $1 a share in dividends. And so I may be able to buy these shares at very cheap prices now and will prosper over future years, right? And this is one of those stocks that even in a recessionary scenario, I can buy the dip in. Because their cash balance is so big and they're so well financed with a lot of cheap debt that they financed many, many years ago, obviously when debt was a lot cheaper, this is a situation in regards to Wynn Resorts that I can buy the dip. It doesn't matter. A recession comes, this happens, that happens. It doesn't matter. I can buy a Wynn. It's one of those I can sleep well at night holding a stock like Wynn Resorts. Okay, so Palantir right off the bat here, down around 9% again today. The stock's down 18% plus in the past 5 days. The stock's getting absolutely, annihilated, I guess the way we could put it here in the short term, right? And, it's interesting. I made a statement, this was last week, and I said, Palantir matters significantly to the overall market, much more than a lot of people think. And some people laughed at me for that statement. Oh, Palantir doesn't matter. I'm like, you'd be surprised. Palantir is a huge psychological stock. A huge amount of the retail community owns Palantir or pays attention to Palantir. Even if they don't own it, they at least keep an eye on it, right? And when you see, and I said, if this stock reports, if the company reports a quarter that's just, and that's kind of what happened there. They just reported inline numbers. I said, this is going to be devastating to a lot of these more risk-on type stocks. Now, if they come in and reported great numbers, then we're flying and Palantir's moving and all the risk-on stocks would take a next kind of level up there. But when Palantir just came in with inline numbers with a guide that was just barely above kind of what Wall Street was expecting, that was like a huge deflation in the whole market in terms of all the risk-on related stocks. That was a huge letdown. That was like the air out of the balloon, just kind of like, oh, dang, okay. It's not as exciting as we hoped it was exciting, right? Things are just okay, or maybe a little better than okay. That's not the way these stocks have been pricing. And so here you have Palantir in a situation where obviously the stock's falling. A lot of people want to know kind of where's the bottom at for a stock like Palantir. Remember what I told you guys? I said if earnings were bad and the stock goes down, $15. I said $15. Said if earnings were pretty decent, which they weren't, as in like good, the stock was going to 20. The earnings weren't good. When you come in line, that's not good. They would have had to come in with a pretty nice revenue beat and EPS beat. They didn't come in with either. So if that was a situation where we were going to 20, if they came in and just beasted that quarter and came in with like an NVIDIA type quarter, right, where it's just shocking, like, oh my gosh, Palantir is going crazy, that was a $27 type move, right? And so unfortunately, we got the bad side, just inline numbers, inline kind of everything, and look at where we're at. And that's exactly where we're going to be, $15 here for a little bit. We'll kind of move around. And the good news is a lot of that Wall Street money is kind of selling now at this point in time. I think retail's taking those shares off of Wall Street's hands, and then we'll see kind of where things transpire. But it kind of played out exactly how I thought it was going to play out, given the scenario that happened, right? So that's what happened there with Palantir.